Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His website's pifinancial.com and PolarFuturesGroup.com. Welcome back to the show, Drew.
Thanks for having me on again, Jim.
Drew, it was Central Bankers Day with both the Bank of Canada and Federal Reserve holding policy meetings. First of all, let's start with the Bank of Canada. Did they do anything today?
Yeah, it was a busy day with both out on the same day. Today, the Bank of Canada didn't do anything. They kept their policy rate unchanged on the day. But what's important when we go into these meetings is the expectation of what the expectation of the market, what the expectation of the market participants are of what the central bank's going to do, not only with the rate, but also with the guidance that they give the market with their statement. So in that regard, I would say the Bank of Canada may have done more today than the Federal Reserve did, but at the same time, they didn't move the overnight rate. But what they have done is they've taken a more dovish approach, or a view that even though Canada and the Canadian economy have done well lately, we may be facing some harder tests ahead, and if the economy was going to slow, they would look at easing. So that's been a bigger shift, because the Bank of Canada has been one of the few central banks around the world that has not cut interest rates through 2019, and that's kept the Canadian dollar stronger, not only against the U.S., but against a whole other group of currencies around the world. So even though they didn't do anything, we did see a change in policy in that they are more inclined, I think, to be cutting rates as we go into the future.
The Bank of Canada also issued a statement about economic outlook, and they expect Canada's economy to slow even more next year and the year after that. Yeah,
and that fits in with their tendency to want to ease more as we go forward. So we got an upgrade in the economy through the second quarter of this year, and then sort of offsetting that upgrade was a downgrade into the years ahead. So they did sort of leave a caveat in there that if the federal government was to come in with a large fiscal package, then it's possible that, you know, the GDP growth could be a little higher than expected. But at the same time, there's been more restraint on the provincial side. So those could have some offsetting functions to them. However, the Bank of Canada right now is setting itself up to look at things easing more going ahead. And if that were to be the case, then they're more likely to cut rates, especially given the environment, the global environment of almost all other central banks having to cut rates as well. So it would become very difficult for the Bank of Canada to stand pat while all the other banks have reduced their overnight rate.
The Canadian dollar dropped quite sharply today. Do you think that was an overreaction to what the Bank of Canada didn't do?
I really like to look at market moves that happen on news releases in two different lights. I look at one as truly reactionary, and that can be, you know, an economic data print like a jobs number or a GDP number. That is more of a one-off, and the currency may readjust in price. But I think what we saw today has been a shift in policy, and those tend to be changes in trend. So over the last little while, and especially the last couple of weeks, the Canadian dollar's rallied a couple of cents off the lows, and now we've turned lower on the move today. And again, I think that's been more of a shift. I think the Canadian dollar was strengthening on the narrative that the Bank of Canada was not going to have to cut rates, or not as soon as the market now expects them to. And with that shift in narrative and the fact that the Bank of Canada might be joining other central banks in the world, I think there's more likely a continuation of the move that we saw today. So that would be a further weakening of the Canadian dollar. The recent support level has been around 75 cents. It's not that far away for us to sort of ease back down to that level. And then it will be, just as the Bank of Canada is, data dependent going forward to see what kind of moves we get from there.
Where does the Canadian dollar go from here?
From here, again, I think it's going to be data dependent. Near term, I think this recent strength in the Canadian dollar is more likely to be done. So I think we do have a shift into a lower Canadian dollar going forward. Again, it's going to be very data dependent. Our employment numbers have been strong, so we've got about a week and a half until we get our next month's employment data. If the data were to soften further, then I think you're possibly looking at a break of 75 cents. But right now, I'm looking for Canada to ease back down to 75 cents, and then I'll be adjusting from that technical support level to see where we go to next.
We'll have more with Drew Zimmerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, the Federal Reserve policy has much wider ranging implications than what happens in Canada. What was the takeaway from the Fed's statement today, and what were the market reactions?
Yes, much broader implications to the Fed policy. With Canada, it was mostly just a movement in the Canadian dollar. With the Fed policy statement and Q&A afterwards, we had most markets moving. So I think the key takeaway that came out of the statement and the Q&A period that came out first was that the Federal Reserve is done for now cutting rates. So we've now had 3 rate cuts at the last 3 meetings, and at the first of those rate cut meetings, they implied that this was going to be a mid-cycle adjustment. I think we've seen some of the data level off, if not some of the data get better over the last month or two, that the Federal Reserve knows their policy has a time lag to it for it to take effect. So they really emphasize the fact that they're happy with where rates are now. They want to keep rates where they are now, and it would take a material, and again, he highlighted material several times, shift in the incoming data to get them to cut further. So that was sort of the initial reaction through the statement. That had the U.S. dollar moving higher, that had stocks maybe marginally lower, bonds were lower, gold was lower. That was sort of the initial reaction. However, through the Q&A period, when asked what it would take to raise rates, so the other side of the equation, if we're going into next year, and again, this was just a mid-cycle adjustment, he said that would largely have to be based on an increase in inflation that they just don't see coming. So as far as the overall reaction to this meeting, and that the reaction to that statement had the U.S. dollar dropping off again, it had gold moving higher, and it had stocks moving much higher. So the thought as we went into this meeting was that the Fed would likely cut and then signal some sort of pause in the market, where the market seems to be taking away, the final takeaway of it all is that, yes, they're going to pause for now, but there's a pretty high bar in order to have rates go back up again. And that, I think, alleviated the stock market, with stock markets going higher again, and again sent the U.S. dollar lower because interest rates aren't expected to be rising anytime soon in the U.S. dollar. So as far as the grand takeaway, Powell always seems to be trying to walk on a bit of a knife's edge not to upset the market one way or the other. So today gave us a little bit of both, where the initial reaction was a more hawkish Fed that wasn't going to be cutting rates anymore. However, that transitioned throughout the day into a more neutral, but a long way away from hiking rates again, sort of a Fed. So a little bit of a sweet spot, I think, here for the markets. And we'll see if this sort of overall takeaway goes into the end of the week as well.
We'll have more with Drew Zimmerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, given what the Federal Reserve had to say today, what do you expect that to do to the price of gold?
Yeah, again, we had a serious flip-flop out of the markets today when they were leaning first to a hawkish sort of a Fed announcement, and then more of a, I don't want to say dovish, but a more steady Fed as we go forward. So for gold initially traded lower and then up on the day to close. I think we were just around 1,500 on the day, just under. To me, I still think you need to take a little bit of a step back, in the sense that over the last several months, we have had a Federal Reserve that is cutting rates, and, that's been helpful for the price of gold, especially when the expectation of the rates cuts were coming, really helped gold more than maybe the last couple of months of when they've actually happened. Now that that is done, I do think that there's still going to be a little bit more trouble ahead for gold. So both gold and the bonds were up by the end of trading today. I think both of those markets, after taking a step back and looking what the Fed has said, I think they're both more vulnerable to be heading lower, especially with the stock market continuing to be at or near all-time highs. So if we have rates moving back higher, that's going to move real rates higher, which is a negative on gold. And the biggest thing for me that I see in gold right now is a huge position risk in gold. That means there's been a massive amount, just off the all-time highs, amount of speculators that have come in on the long side of gold. It had been a very bullish run-up as we kind of came off the 1250, 1300 level, all the way up over $1,500. So I think that we're near a price point where all those speculators that are in the long side of gold might have to throw in the towel. Again, I want to emphasize that I think this is what I would call a short to medium term view on gold for myself. I think we need to sort of have these longs cleared out. And again, I think the price pressures can push gold lower. That would give me the view that we're going to see likely a sharper decline in gold. But again, I'm looking for that to give these longs are reason to get out, and then again, that's a better position for me to be long of gold over the medium to long term. I think there's going to be a lot of reasons that you want to be long of gold, but in the short term, I think this recent action by the Fed and I think the positioning risk in gold makes it very vulnerable to a sharp sell-off.
Have people given up on a resolution of the U.S.-China trade war anytime soon?
Well, that was a big focus of what Powell was speaking about today, where they thought that things were getting better, or in his words, we're taking a step in the right direction. So with any of these events that take a lot of time, you do see some investor fatigue, I guess you could say, with keeping up to date with it. However, the U.S.-China trade talk is so important just to not only the actual trade and dollar volumes that happen, but just investor sentiment and psychology, the risks that businesses are willing to take, the further investment they're willing to take, that sort of thing. So I think it is still incredibly important. Maybe it's come off the front pages because it does seem like we've taken a step in the right direction. However, again, I would emphasize that's a preliminary step in the right direction in what is phase one of who knows how many phases exactly. And, it still needs to get completed for some of the good news that's been priced in for those prices to make sense. So I do think if it gets completed, prices can go even higher. Markets sort of will always be a live weighing machine of where they think the odds of that are. So I do think there's the thought that we are headed in the right direction, and I hope we are. It'd be great for the global economy if a trade deal, even just phase one, was completed in the next month or so. But again, we always have to be willing to see different outcomes, and again, I think you can see that sort of get front run in market prices. They will be a true weighing machine as people put their money where their mouth is on what they think is going to happen going forward. So again, I think with stocks at all-time highs, there's a belief that the trade deal does get done, and we continue moving in the right direction on that front.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim. Appreciate it.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. If you have any questions for Drew or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.